Hello everyone, this is John Gilbert at Security First Asset Management with a weekly market update for the week beginning June 10th and ending June 16th. Now before we get into that, I just wanted to say real quick that the next event that we'll have coming up here will be the halftime report that will be happening towards the end of July. There'll be some more information coming out about that soon, hopefully, so keep your eye out for that. Now, if you ever have any questions about any of the events that we have coming up, we have our schedule of events for 2024. Now, these are prone to change, times, locations, so keep an eye on our website for the most up-to-date version of this calendar. So moving on to market news. Last week, the major domestic equity indexes ended the week mostly higher. So the S&P 500 and the NASDAQ Composite, they touched new highs last week. Dow Jones Industrial Average ended the week down. So the market's advance has remained exceptionally narrow for the second consecutive week. Now, over the past few weeks, value stocks have underperformed relative to growth stocks and specifically tech stocks. So the positive performance of tech stocks has largely been driven by continued enthusiasm over the potential of AI, artificial intelligence. So a few significant events that occurred in the market last week. There was a Fed meeting, and the Labor Department also released its consumer price index reports. So on Wednesday, the central bank held its benchmark rate steady. So that's a range of 5.25% to 5.5%. Now this was widely expected. No one expected the rate to go either up or down at this meeting. And the Federal Reserve officials in this meeting, they also penciled in just one interest rate cut for the remainder of the year. Now, for 2024, there haven't been any interest rate increases or decreases. Earlier in the year, they had said that they were planning to decrease interest rates 3 times. And so since then, they have readjusted that expectation for one time. Now, this is all dependent upon inflation data, how that's coming in, and if they can have a few months of a good track record going on. So this decision, it came hours after the Labor Department reported the Consumer Price Index, which they reported the Consumer Price Index was essentially flat in May, and this is for the first time in nearly 2 years that it has been essentially flat. So on a year-over-year basis, the core inflation fell to 3.4%. That's the lowest level since April 2021. And on top of the favorable news in consumer prices, the U.S. producer prices also unexpectedly declined in May by the most in 7 months. That is another welcome development that will help strengthen the Federal Reserve's confidence that inflation is moderating, that is starting to come under control. Another piece of data that was released last week that also helped to calm some of the inflation fears, but perhaps raises concerns for the health of the overall economy, is that there were surprise jumps in weekly and continuing jobless claims. So the reason that this news is interpreted favorably, even though there are more jobless claims, is the increased number of claims is a sign of a slowing economy. And a sign of a slowing economy is a sign of slowing inflation. And so the market is interpreting this news favorably as a sign that inflation is slowing down. That is something that we'll have to be on the lookout in the future, as there could potentially be other repercussions as those jobless claims rise. But we'll keep an eye on that. If y'all have any questions, please feel free to give us a call or visit us at the office. Thank you so much. Have a great week.